The SPC Trap, Korea's $350 billion negotiation with the U.S. Summary. On September 12th, Channel A reported that the U.S. demanded South Korea to establish a special purpose company, SPC, under U.S. management and deposit $350 billion in cash into it. According to the report, all profits generated would remain in the U.S. The Korean government, facing tariff pressure, is allegedly refusing to sign under such conditions. This stands in stark contrast with U.S. and international coverage, which framed the deal as a $350 billion investment package, or non-binding MOU, without mentioning an SPC or cash deposit requirement. Structured opinion, BBIU analysis. The channel a leak about a U.S.-controlled SPC demanding a $350 billion cash deposit cannot be separated from the negotiation sequence unfolding since late July. What began as a tariff reduction deal has evolved into a systemic contest over Korea's reserves, its financial sovereignty, and the narrative legitimacy of the pact. Stage 1, July 31. Trump announced the $350 billion Korean commitment as if it were a secured extraction, stating that the bulk of returns would remain in the U.S. President Lee framed it as a hurdle overcome, but from the start there was a glaring asymmetry of interpretation. Stage 2, August. The deportation of Korean workers in Georgia fueled domestic resentment and framed the U.S. not as a partner, but as an enforcer. Stage 3, August 26 to September 9. International outlets confirmed that negotiations stalled over the Forex issue. Korea argued that draining reserves at such scale would destabilize the won. The U.S. pressed for hard dollar commitments. Our prior BBIU analysis, Deadlock at the Core, detailed why Korea's capacity, policy banks managing $20 to $30 annually, pension flows at $2-3 a month, makes a $350 billion fund structurally disproportionate. Stage 4, September 12. The Channel A SPC and cash leak crystallized the issue into a politically unassailable position. No Korean government could sign an agreement that implies near-total depletion of reserves with profits sequestered in the U.S. Seen in this sequence, the leak is both plausible, consistent with U.S. leverage tactics and Trump's rhetoric, and functional, giving Lee political cover to resist. The SPC framing transforms what was being marketed as cooperation into a symbol of confiscation. For investors and policymakers, the conclusion is clear. The $350 billion headline figure will not materialize in the form of a single SPC cash deposit. Implementation will fragment into guarantees, loans, staggered projects, or remain partially symbolic. The decisive axis is not tariffs, but Forex sustainability. Without safeguards, Korea faces reserve depletion, won volatility, and systemic fragility. The SPC narrative, whether literal or rhetorical, therefore marks the turning point. It reveals that the trade pact is no longer about tariff relief, but about who commands Korea's financial core.
Welcome to the BioPharma Business Intelligence Unit, where symbolic integrity meets strategic clarity. At BBIU, we go beyond the headlines to decode the structural forces behind global biopharma, AI, and economic realignment. If you value precision, verification, and symbolic depth, this channel is for you. Subscribe now to access our weekly briefings, dossiers, and intelligence reports, and consider joining our institutional tier to unlock early warning systems, custom metrics, and exclusive strategic insight. You're not just listening, you're entering the future of epistemic intelligence. www.biopharmabusinessintelligenceunit.com